Good evening. It is time for today's Tax Talk. I am your host. I'm attorney Stephen Leahy. It is Thursday, February 24th, the year of our Lord 2022. And it is tax time. And one of the most common questions I get, well, most people that I help, or many people that I help, I should say, are 1099 people. They run their own, they're independent contractors. And there's lots of questions about 1099. Some people call them 1099 employees, kind of a misnomer since you're not really an employee. That's the whole point of getting a 1099. So that's what we're going to talk about today. Won't you join us? Okay. So again, 1099, we're so conditioned as Americans that that when you get your check, that check is yours. When working for somebody and that check is yours, and a lot of people will then count on that refund from the government, the tax refund every year, because you pay more in taxes than you owe. And then the IRS will return that money to you based on your tax return. And so when people take a 1099 job, they don't always understand the consequences of that decision. Now, many employers will say, well, I'm not going to hire you as a W-2 employee. Do you want to get paid as a 1099? Then you can have the job. And so many people think, well, yeah, okay, I'll take that. It's not that much different. But in fact, it is different. Here's the biggest difference. Right? They don't take taxes out. Right? And here's another difference that you might not know. Your employer is not going to help pay your Social Security and your Medicare fees. Because as it stands, when you're an employee, the employer splits it in half with you. And so they pay roughly 7.5% of your check to the government for Social Security and Medicare, and you pay 7.5%. Comes out of your check. But when you're a 1099 employee, well, the employer, and again, I hate to use that term, 1099 employee, because again, you're not an employee, you're an independent contractor, and So now there isn't an employer to pay half of it. That's on you. You have to pay the self. Now, what happens when you're a 1099? You don't pay the Social Security and the Medicare. You pay what they call a self-employment tax, roughly 15%. I think it's a little bit more now. So you pay your income tax. You still have to pay income tax, and you have to pay a self-employment tax. So if you are, and let's just talk about by the hour, because maybe that makes it's easier to think of it this way. But maybe I'm making $20 an hour and I'm an employee. Well, I get that $20 an hour, and they take out taxes and they take out my portion of Social Security and Medicare. The employer matches it, and they send that to the IRS. And I get my check. That's my money. At the end of the year, I file my tax return, and I might get a refund. They took too much. As a 1099, I'm not an employee. If I get, let's say still get $20 an hour, I get a check for, let's say, 40 hours a week. I get a check for $800. But that $800 is not my money. That $800 now is I have to pay taxes on. Well, I always had to pay taxes on it, so that doesn't change. But now I have to pay self-employment tax also. And so I'm really going to take home less money than I did as an employee. There's two reasons why an employer wants to pay you as a 1099. They don't want to do the paperwork, and they don't want to contribute to your Social Security and Medicare. So that rests on you, right? The paperwork means they have to send it into the government all the time. They don't want to do that. They want you to do that. And so what happens, because people are so used to getting a W-2 employee, right? I get a W-2 at the end of the year, and it tells me how much money I made, how much money they took out for taxes, federal income taxes, state income taxes, and Social Security and Medicare. It tells me all that information. And at 1099, they just send how much money they gave me. That's it. Now it's up to me to report that information, pay my taxes on it, and the self-employment tax on it. So if I haven't put any money aside by the end of the year, I'm in trouble, because I'm not going to have the money, because most of us are conditioned to live off the money that we make on the check. So now what do? Well, now I'm going to owe the IRS money. And this is where now I'm going to have to pay penalties and interest, because I'm not going to be able to, I don't have the money to pay them. What a lot of people do is then they wait and they don't file their tax return. That is a mistake. Always, always, always file your tax return, even if you owe them money. Attorney Leahy, why is that? Well, you want to file it on time. You want to avoid the penalties for not filing, because there are additional penalties. You have penalties for not filing on time, and then you have penalties for not paying on time. But you don't want to have both penalties if you can avoid it. And here's another key reason. There's what they call a CSED, the Collection Statute Expiration Date. Well, that means that it's generally 10 years from the date of assessment. If I file on time, that date of assessment is going to be the date that the tax returns were due, this year, April 18th. And that's the date. 10 years from that date, the IRS can't collect from me anymore. If I don't file, and it also, it also starts the statute for how long they can audit me. They have 3 years to audit me. If I don't file, well, that statute never begins, right? And I'm just extending my tax problem beyond the time, and that's a problem. You don't want to do that. You want to always file on time, even if you owe the IRS money. And if you didn't file last year, and now this year it's time to file, don't think you can't file this year if you didn't file last year. You can still file. So file your tax return and then worry about last year. But try to get this one in on time and pay the tax if you can. If you can't, here's what 1099 people should do. I think last year, 2020, they started a new 1099. Now there's a bunch of, we talked on this show, we talked about 1099. We talked about 1099As, which is abandonment of property. 1099Cs, which is cancellation of debt. 1099Ks, that's going to come from the Venmo and these other brokers. 1099 miscellaneous, MISC, which used to be for independent contractors. Now they have a 1099 NEC, a non-employer compensation, non-employee compensation, and there's a bunch of other ones. Well, let's go to that, and at least I'll show you that about these different 1099s, and you'll see that there's a bunch of them, right? A, acquisition, abandonment of property. C, we already talked about. CAP, CAP, changes in corporate control. Dividends, DIV, dividends. Certain government payments. G, H, health coverage tax credit. Interest, INT. K, merchant card, we already talked about that. That's the third-party network payments. LTC, long-term care. Miscellaneous, we just talked about that. OID, original issue discount. PATR, taxable distributions received from cooperatives. Q, payments from qualified education programs. R, distributions from pensions, annuities, retirement. SA, distributions from health, and there's others too. There's others. But so these are a list of these 1099s. Much of these 1099s are income. Now, whether I receive a 1099 or not, I still have to report 100% of all my income. So if I'm working for somebody as an independent contractor, 1099, and they pay me all year, but they didn't ever send me a 1099, that doesn't mean I don't have to file my tax return. I still have to file my tax return. And matter of fact, I'm obligated to file my tax return. I have to tell the IRS what I made. If I don't get the 1099, that doesn't relieve me of the obligation to pay to file my tax return and report all that income. Okay, so all this is very important, and I see this so often, and that people get into this what we call the cascading tax problem, that they don't really realize this when they begin as a 1099, because most of us don't begin our working career as a 1099. We start out as W-2 employees, and if somebody's, like these what they call gig employees now, the drivers, the Instacart, all of these other gigs now that they have, you get a 1099, and they don't take out taxes, and it's on you to pay the taxes. And again, if you wait till the end of the year, well, you're going to owe a lot. You're not going to have the money to pay them, and you're supposed to pay quarterly. So if I file my 1040 and I owe the IRS $12,000, the next year I'm supposed to pay $3,000 a quarter. For 4 quarters, that'd be $12,000. And if I owe more at the end of the year, I have to pay more. And then the next year after that, I'll have to pay more per quarter. If I make less, and I don't have to pay $12,000 in taxes, well, then I'll get a refund like everybody else. Okay, so this is how it works. The cascading tax problem, again, is when I get to the end of the year and I owe money and I don't file my tax return. And then I'm fighting for a year or 2 years to pay my back taxes, and I ignore my current taxes. And then I file again this year, and I owe again. And I'm always paying last year or the year before or 2 years before or 3 years before, and I'm not paying my current taxes. That's a mistake. That's a cascading tax problem. I see it all the time. Don't fall into that trap. Did you know that you can send a check to the IRS all throughout the year? Every time you get a check that's from a 1099, you can carve out 20% and send it to the IRS. And you can designate on the check that you're sending what it's for. Payments, 2022 tax, estimated 2022 tax, income tax. And you can put that on your check, and make sure you do that. Because if you don't do that, the IRS will take that money and they'll apply it for the earliest year that you owe. And so you're helping that cascading tax problem. So when you get a check, you can send a check to the IRS. Again, you can cover out 25%. If it isn't enough at the end of the year, at least you have paid most of it, and you owe a much smaller amount, or maybe you overpaid, and then you'll get a refund. Okay, so that's the way you should do it. Or actually, what you should do, and this is what and people say, well, I'm not really making enough money to worry about this. It's when you're receiving 1099s, you're in business for yourself. You are a company. Treat it as a company. Maybe it makes sense to start a corporation and do what they call a subchapter S election, and start treating it like a company, and take the deductions that you are entitled to by law. Many people who do this on their 1090, when they're 1099, then they do what they call a Schedule C on their 1040s, and they deduct their expenses. Well, these are highly scrutinized by the IRS, because the people who cheat, this is how they cheat. They make up expenses. And so these expenses on a 1040 return for an individual on Schedule C are highly scrutinized. So you'd be much better off to start a company, have that company do their own tax returns, treat a company separate than you. It's a separate entity, and you should treat it as such. You should treat it as a company. It's a business. Treat it as a business, and start that way. That makes a lot of sense. These are things that I help people do all the time. Again, most people who come to see me, or many I should say, are 1099. They accept 1099s. Some from one company, some from many. Some just work their own business and they're sole proprietors. Who pays the most tax in America? These 1099 people pay the most tax because they're paying the self-employment tax on their own. And they don't take the proper deductions, and they don't structure their business correctly to take advantage of the deductions. So this is what you should do, in my opinion. So, but you should consider it. I had some stories I was going to talk about, but I'm not going to talk about them today. They had some, with the 5 things. Maybe I'll breeze through it very quickly. Let's breeze through it very quickly. So the 5 things 1099 employees need to know. Again, the first thing you need to know is you're not an employee. You're responsible for paying quarterly income taxes. I mentioned that to you. You're responsible for self-employment tax. I mentioned that to you. Estimate how much you'll need to pay. As I mentioned, 25, 30, and you'll need to do that and make. And I don't think you shouldn't wait quarterly. You should pay it for every check you get. It's just easier. And then you won't have the money in the bank. If you wait and you need money, you're going to spend it. And then it's going to cause trouble. Develop a bulletproof savings plan. And again, I think this is one way to, the bulletproof savings plan, in my mind, is just to pay it first. Because then you don't have to worry about a bulletproof savings plans. Because there are no such things. The money's in your name. If you're having a problem, you're going to access it. It's just human nature. Consider software and tax process. Well, you should do this anyway. This is about building your business and having professionals help you build your business. And again, most of my clients, very good at what they do, just not very good at taxes and bookkeeping and things like that. So get help. And here's another thing that I want to mention this to people. If you're working on a 1099, and if you're in business for yourself, you're probably not charging enough, right? You didn't consider these additional taxes. You say, well, they used to pay me $25 an hour. Now they're going to pay me $28 an hour. So I'm doing better. No, you're not. You're not doing better. So most people who are in business for themselves, they just don't charge enough. Okay, so consider charging more. Because there's extra expenses. Maybe you need tax help. And there's nothing wrong with getting tax help. But then you better work that in your price. Right? Because that's an expense that you need in order to be in business. And so you better cover that with the price that you charge. So that makes sense to me. Okay, here's one more. What does it mean to be a 1099? And so this, she goes over some things. She talks about common people who usually classified as a 1099, the benefits and drawbacks we've already talked about. Do I need to pay taxes as a 1099 employee? Of course. Again, we always talk about. And then she talks about these other things. Remember, I always talk about on this show, the 16th Amendment, which gave the government power to impose an income tax. What does it say? Income from whatever source derived is taxable. It's always taxable. Okay, so I think this is good advice if you're a 1099. Treat your company as a company. Treat your business as a business. And you'll be much better off because of it. I'm always happy to help you if you have a question. And I'm going to ask you to help me by liking and sharing. Like and share this information. People need to know. I need your help to get it to them. So like and subscribe to the channel. We need your help to get the word out. And what happens when you owe the IRS money? And they start coming after you. How do you fix that problem? Well, I can tell you the first thing you should do. You should get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. Freeirsbook.com. Get a copy of my book, Deal with Your IRS Problem Today. It has how this is all fixed. Maybe you don't even need any help. Maybe you can do it yourself. Well, how do you know? You get a copy of the book. You find out. Deal with Your IRS Problem Today. Go to freeirsbook.com. Okay, so freeirsbook.com. So thanks so much for joining us. I look forward to seeing you again tomorrow. No, actually, tomorrow is Friday. We do the Trust Radio Network podcast at about 2:15. So on all these venues, join us tomorrow at 2:15. I think I have attorney Larry Smith talk about consumer rights and consumer protection. And you won't want to miss that show because Attorney Larry Smith is outstanding, knows so much about this, and he'll share that information with you. So join us tomorrow at Watch Talk Radio. You can do it at watchtalkradio.com. You can watch all these shows are on watchtalkradio.com or the venue that you see us now. So thanks so much for joining us. We'll see you again tomorrow.